What's going on, everybody, and welcome to the video. In this one, we're just going to be going over my weekly portfolio. How did I perform? What did I do? Did I buy any stocks? Did I receive any dividend income? And we'll also be talking about the market as a whole, kind of just the weekly wrap up. If you're new to the channel, make sure to subscribe, turn on post notifications so you don't miss out on any future videos. But let's go ahead and get straight into the video. So my portfolio is currently sitting at $11,000 and $11,875.39. Now, we have been on a volatile week. We went all the way past 12,000 and then we came back down, and my portfolio for the week is down 1.07%, which is about $129. Looking at some different activity that happened in my M1 Finance portfolio. Also, if you don't use M1 Finance and you're thinking about it, I would highly recommend it. Use the link in the description or the pinned comment down below. If you sign up and deposit $50, you'll get another $50 free. That's a 100% ROI. It's free money out there. Make sure to take advantage of it while you can. But this Monday, on February 14th, I put in $150 of buying orders, and I bought Charles Schwab, Apple, Nvidia, Broadcom, Microsoft, Visa, and Starbucks, which I thought were some pretty solid buys. You know, buying any amount of money into these companies provides more dividend income for my future. And I did receive a dividend of $1.19 from Realty Income on Tuesday, which is a great monthly dividend stock, REIT to be exact. But let's go ahead and talk about what's going on in the market right now, because there are a lot of different things. Stocks have been down pretty bad. You can just see, especially in kind of like medical devices and technology, you know, Nvidia. We have companies like Intuit, Apple, Microsoft, Google, Tesla. A lot of these companies are not doing that well. You know, PPL Corporation is down 8% roughly. Things are not looking the best for a lot of these companies. And the reason is it says to be about the Russia and Ukraine tensions. So we'll see right here. S&P 500 down 2% as Ukraine crisis sparks. Dow dropped 622 points for worst session of 2022 because Ukraine fears are rising again. Sell-off stocks deepens as Ukraine adds investors' worries. Now, the way that I am playing this is I'm buying the dip, because the S&P 500 and the entire stock market has proven historically to perform so much better than just leaving it into a bank account over the long term. And I do believe that these times of fallen prices and lower prices provide for better gains in the future. So that is my personal opinion on that. That's how I'm playing it. You can do what you want to. If you want to sell, you can sell. I'm just letting you know because I'm not a financial advisor. Everything I say is not financial advice. But if we go ahead and look at the exact numbers, year to date, so from January 1st, the S&P 500 is down 9.33%. Over the past year, I say only, but it's up 11.3%. It was up a lot more. 6 months, we are actually down 1.29%. Past month, we're down 4.06%. In 5 days, 1.44%. You can see a lot of these other composites and indexes are following suit. Dow Jones is down, NASDAQ, Russell 2000, the NASDAQ 100. So this is what's happening. You know, we have concerns about inflation as well, concerns about Russia and Ukraine tensions, and different things are happening. And if the market completely tanks, I will use cash that I have and deposit it into the market. That's the way that I'm playing it. I think it's the best way to possibly play it, in my personal opinion. I think that a lot of people are becoming fearful because they're active trading, and that's kind of what causes movements in the market, is active trading. And as long as you're a long-term investor, these are the ones who tend to win. I just kind of want to stress that, because I think that a lot of people are forgetting that. Like, if we go ahead and look at the past 5 years, the S&P 500 is still up 83%. If you just left your money completely in a bank account for the past 5 years, you're probably not making any return. And you're making negative return, including inflation. And that's not necessarily what you want to do. Maximum, 3.7,000% ever since roughly 1982. And you can just see there are times in the market when things dip. I'm even going to zoom in because I really want to stress this opinion. I think that a lot of investors nowadays are super new and they don't understand historical price action, and they're kind of becoming in the market and they're seeing all this, their first bear market, and they're becoming fearful. And I just want to stress it, like, things happen. We'll see. Went from 314 to 250, 240. We went from 1460, 1500 pretty much, back down to 835. And this was a multiple year kind of fall, you know, dot-com bubble, tech wreck. Then we went from 1525 all the way down to 683. And then we've gone up, and we went up to 2000, and then we went down to 1864. Went from 3300 back down to roughly, if we get right there, about 2,400. And this was COVID, okay? And if you just look, dips happen in the market. And I just want to stress, I know I've said it multiple times in this video, but it's because I really believe in the concept that long term it will perform well. And with all the negative news, you kind of have to learn to bat out the negative news and focus on your portfolio and how you're going to do it to maximize your returns. And if we just go ahead and finish this video off by looking at my annual dividend income estimates, annually I'm expected to make $397. Yield on cost is 0.01% lower. It was a lot higher, and then with all the FUD coming out in the market, it has not been doing as well just because of the market, and things have been really flat recently. Like if we go ahead and look at my portfolio over the past month, we'll see I'm down $122, or past month down $255, 2.17%. In quarterly, I am down $300, which is 2.85%. So that's not necessarily the best thing you ever want to see. Now, if we just go ahead and look at my expected dividend income for the month, looking at February, I'm supposed to make about $22. Next month in March, which is coming actually pretty soon, $27. And then usually the first month of each quarter is my best month, and I'm supposed to make $46. But when it comes to dividend stock investing and dividend growth investing and all that good stuff, whenever you put more money in, these numbers rise, and that is what it really all matters about, being able to provide financial freedom for yourself and your family, loved ones, all that good stuff. And so I'm going to wrap the video up right now. Thank you for making it to the end of this video. If you enjoyed it, make sure to subscribe to my channel, turn on post notifications so you miss out on any future videos. Leave a comment below how you're playing it in the market. I'd like to know how you guys are doing, what you guys are doing. Check out M1 Finance if you have not already. You deposit $50, you get a free $50. It's incredible the promotions they're giving out right now. Thank you again, and I will see you at the next video.